Hi, this is Ben, CEO and founder of BPB Tax Resolutions. Today I'm going to discuss how the Internal Revenue Service can file a return for you. Did you know that if you don't file a tax return, the IRS can file one for you, determine how much tax they think you might owe, and then send you a bill for this tax that they made up? The bill is often more than you really owe, and then they add penalties and interest on top of that. Sounds kind of crazy, doesn't it? Well, sure enough, the Internal Revenue Code gives the IRS authority to file a return on your behalf, even if it's not correct. This is called a substitute for return, or SFR for short. Also, they can go back and file a tax return from years ago. How is this possible? And can you challenge this tax liability? Well, of course you can. Let's briefly step through the process and see what you can do about it here. First, let's say something in your life got in the way of filing your tax return. Maybe you had a death in the family, your accountant screwed up, or it was a slow year for your business and you simply couldn't afford to pay, so you didn't file. Don't worry, you're not alone. Millions of other people didn't file either. Next, the IRS may look at what income was reported to them from other third parties. Maybe a past employer you had, a brief contracting job you completed, or some stock you might have sold. This information is then used to create your tax return that often results in a tax balance higher than what you actually owe. The IRS doesn't include any additional expenses or exemptions that you are entitled to. Then the IRS will send you a letter asking if you agree with this tax balance. Let's say this letter got lost in the mail, or maybe you just didn't open it. What happens next? Well, not responding equals agreement in the eyes of the IRS. You'll soon be sent what's called a statutory notice of deficiency, and you'll be placed in the IRS collections. If you continue not responding, the IRS will oftentimes contact your employer and take money out of your paycheck, or call your bank and withdraw money right out of your bank account. What can you do to prevent this? There are a few things. First, of course, file your tax returns on time. Sounds easy, doesn't it? Well, it always isn't. Second, open your mail. It's required that the IRS let you know that they'll be taking action against you. Third, sometimes these SFRs can be resolved simply by filing an original tax return for that particular year. You do have to be a little careful here. Timing is usually important, and this strategy may not be the best one for your particular situation. Well, thank you for watching. And if you have a challenging tax issue that you're trying to resolve, don't do it on your own. Make sure to contact us here at BPB Tax Resolutions to deal with it for you and give you peace of mind.